Hello and welcome back to How About That Crypto. You are watching your daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I am here Monday through Friday and I explain crypto and Web3 while keeping you up to date with all the latest. Today's news stories are huge. Switzerland is making Bitcoin and other crypto legal tender. Yes, you heard that right. Meanwhile, a proposed EU Data Act wants the smart contracts to have a termination function. What does this mean? I will explain it all, and if you like the content or you don't like the content, please let me know by leaving a comment below. Please like and subscribe. And if you're listening on podcast, please give me 5 stars and follow. If you're watching on YouTube, please subscribe and click the notification bell. It helps support me. It doesn't cost you anything. Just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. Okay, let's dive in. The Swiss city of Lugano is making Bitcoin, Tether, and the LVGA points token legal tender. And I got a little thing to share with you here. And if you're listening on podcast, you can use the links below to follow along, but you don't really need to follow along. And I'll show you everything. So NASDAQ.com reports that Lugano, Switzerland will make Bitcoin legal tender. The city of Lugano will make Bitcoin legal tender for people to pay for public service fees or taxes. The city director and the mayor team up with Tether. They have the USDT stablecoin, which has gotten a lot of scrutiny, and because they have opaque books and maybe this city has gotten a peek behind the curtain to see if Tether is legitimate and they don't have a ton of their money in commercial paper. I talked about that in the past. And, but anyway, this is it doesn't matter because either way, it's bullish for crypto. Now, over 200 merchants have adopted Bitcoin in the Lightning Network. The effort is called Plan B, B as in Bitcoin. Plan B is going to create a physical venue in the heart of the city, which will be a hub for Bitcoin and blockchain startups if they want to move to the city. Also, for event spaces, the city director says El Salvador's GDP increased by 10% and its tourism by 30% after declaring Bitcoin a legal tender. Imagine what we could do in a city at the center of Europe. So what they're going to do is they're going to create a business-friendly environment. They're going to minimize bureaucracy, and they're going to create 2 funds, $3.26 million for the adoption of Bitcoin, USDT, and LVGA. LVGA is a city's stablecoin, and that each coin is worth 1/100th of a Swiss franc. And then they're going to put together another fund, $108.6 million, for Bitcoin and blockchain startups to relocate to the city. So it's pretty clear what they're trying to do here. They're trying to adopt people, try to get people to come into their city for the sake of opening up these businesses. And I had something really interesting I don't want to read for you. And it says, another aspect of Lugano's Plan B involves a close relationship with academia. It plans to create a specialized curriculum on Bitcoin and Lightning in a partnership with local universities to increase the skills of young students in these technologies. Bitcoin and blockchain education efforts will also include the creation of 500 student grants to create a skillful and specialized workforce. In late October, the city of Lugano will host the Bitcoin World Forum, a global event based on the acceleration of Bitcoin adoption and the advocacy for freedom of expression. Arduino and Poretti announced at the event. That's the city, the head of the city, as well as the mayor. The city planner and the mayor. And the speakers also announced the intention to have Lugano start mining Bitcoin as Plan B researches strategies the city could leverage to employ renewable energy sources to yield Bitcoin. So I think that this is pretty huge. I mean, the fact that they're going to bring academia into it and they're going to start teaching people and they're going to create grants for the students who study this stuff so that they can turn around and be skillful workforce and even start up businesses. What are your thoughts? I think that this is extremely bullish. What do you think? Do you think that this is a good idea? Do you think this is a bad idea? Leave me a comment below. Now, I discussed in the past, in the last couple episodes, this thing called MiCA, Markets in Crypto Assets. This is a regulation that their EU is trying to pass to regulate crypto. And if you remember, there was a controversial thing there that was for the proof of work to be banned, essentially, not completely banned, but effectively banned. Proof of work mining is the energy intensive process of securing the Bitcoin network and the Ethereum network. And a lot of the socialists and green parties really do not like this, so they want to limit its uses. Now they slashed that because the reason that they're trying to push this regulation through has more to do with the Russia sanctions than it does actually creating a comprehensive crypto regulation. So they could come back and worry about the proof of work mining once they get this through, and they can deal with Russian sanctions. That's how the news is being reported. So that's how I'm reporting it to you. The EU should vote on that in the next 2 to 6 weeks. Now, there's another proposal called the EU Data Act. And this looks to control smart contract functions. So what are smart contracts? So there is an episode in the explanation playlist on YouTube. And if you're listening on podcast, you can just scroll down and look for the what is smart contracts or what are smart contracts episode. But I'm just going to give you a little explanation. This is from bitdegree.org. The links are below, so you can check that out for yourself. They say a smart contract is an agreement between two people in the form of computer code. They run on the blockchain, so they are stored on a public database and cannot be changed. So a smart contract is a contract that's written in computer code. The transactions that happen in smart contracts are processed by the blockchain, which means they can be sent automatically without a third party. So what that means is you don't need to get someone in between, like escrow or something, for you all to exchange your value or whatever it is that you're exchanging. The transactions only happen when the conditions are in the agreement are met. There is no third party, so there is no issues. Think of buying a house. When you buy a house, you have to transfer the title and money. So do I give you the money and you give me the title at the same time in my hands? Well, right now, no. There's multiple parties in between you, the buyer and the seller, in order to facilitate that transactions. Well, now you do not need those intermediaries at all. You can put the title to your house up onto an NFT. It can have the contract. Once you sign it and send the money, then the other party can get the NFT, or you know what I'm saying? Like basically, when I send you the money, you send me the title to your house, but it automatically happens within the function of the smart contract. So you don't need to worry about whether or not you're going to get gypped or out of it. Or you can think of buying a movie ticket. When you go in to buy a movie ticket right now, you need to swipe a credit card. The credit card fee has to get the money from your bank, and then they send the money. So they send the money to the vendor, and then the credit card has to get the money from your bank. Well, you don't need all of that. It just goes directly from your pockets or your wallet to the movie theater, and they send you the tickets, and it all happens simultaneously with computer code. No credit card companies, no bank. So what is this all about from the EU? Like what is it about these smart contracts that they're trying to take care of or do with? So here you go right here. You can see if you're watching on YouTube. This is, let's see, Bitcoin.com. EU Data Act proposes shutdown function for smart contracts. Essentially, the EU wants to shut down the flow of money as they need. According to a press release, the new Data Act seeks to ensure fairness in the digital environment, stimulate a competitive data market, open opportunities for data-driven innovation, and make data more accessible for all. This all sounds great, but due to the large scope of the act, it does touch on smart contracts. It creates requirements for smart contracts. And one of these requirements is called safe termination and interruption. States that approve smart contracts shall include internal functions which can reset or instruct the contract to stop or interrupt the operation to avoid future accidental executions. So basically, they want to be a third party in a smart contract that's not supposed to have a third party. but it's not necessarily for the facilitation of the transactions. It's just so that they could shut down the transactions. It's gotten some pretty negative reviews, and I have one for you here. And it says, this is the case. The negative review says that with Thibault Schreppel, sorry if I butchered that name, associate professor of law at VU Amsterdam, stated, now this is absolutely huge controversial. It imposes smart contracts that make data available to be stoppable. So basically, all oracles shall be redesigned, but how? Or else they will infringe on the law. Schreppel further stated that the approval of this act would make millions of online smart contracts illegal in the proposed jurisdictions with no way of adapting them to the requirements presented in the document. Now, what are your thoughts on this? Now, is this like, dude, I don't know what you're talking about? Basically, they want to be able to stop me from buying something from you if they deem that that's what's best in the name of the state. Now, a lot of people might think that this is a good thing. You know, maybe it is, or maybe this is the big, it's not so much of in theory, whether it's good or bad, because there's definitely two different sides of that argument. But really what this last critic that I just quoted was saying is that all of these smart contracts that have already been created and they're already being used on a regular basis will be considered illegal. And they would have to change all the smart contracts and transfer people over to other things, which could cause massive disruptions and could cause more harm than the good potentially that this law is trying to create. Now, let's just say that that's a completely inaccurate statement. Now, I got another example for you. If the EU does this, but no one else does this, essentially the EU would be shut out of the already robust economy on, say, the Ethereum network with tons of smart contracts and all these other crypto networks that utilize the EVM machine, which is the smart contract machine through Ethereum. So eventually, basically, unless everybody agrees, the US, Europe, and other countries that adopted, parts in Asia and South America and all over the world, basically, they would still be able to utilize the smart contracts as they are, but EU would be shut out of all this. So what are your thoughts about this? Do you think that this is good? Do you think this is bad? Do you think this is necessary? Do you think that I could do a better job at explaining it? Please leave me a comment below. And either way, I'd really appreciate it if you subscribed or liked, because it helps support the channel. It doesn't cost you anything. And I'm going to be here Monday through Friday, no matter what goes on. And I hope you guys have a good day. Hodl on. Or sorry, I hope you all have a good day. Hodl on.